My name is Maximilian. I work for Affinius Capital. I'm the head of Europe in terms of capital relations and business development. There's a constant debate going on at the moment how global LPs are looking at real estate. Is the US still an investable market or not? It's a very interesting and important question, especially if we're at AFIRE. We're now trying to find out with the LPs what are they looking, where they're looking at the universe. If we're looking at the numbers, where are the capital flows going? Are the LPs confirming these numbers, or is it more a home bias at the moment? Interesting and important to figure out what does that mean for the investable universe as investors are looking at the US, as the investors are looking at other parts of Europe. The US is still a very investable market, and that's what we heard here. There might be signs of caution, but overall the US remains a global benchmark and a very open and liquid market. We're thinking about how could an LP rethink how they invest. Obviously, first option, staying closer to home. Invest around your bell tower. Second option is thinking about, I don't have enough diversity, I need to go to other markets in order to diversify my portfolio. Or thirdly, I'm only looking for return, and which markets offer me the best return opportunities. Again, linking that to an earlier made comment about the US market, the US is a great big liquid market, offers great diversification market in one country, one legal system, one tax system. Despite all odds what we're hearing about tax, we put that away, just purely looking at the real estate phase. So there's a lot of opportunity looking at that specific market, and we saw that over the last couple of years. Even US investors stayed home and looked around their bell towers. Other investors from Europe and APAC said, I need to go to the US, given the points I just made. So looking at the market dynamics, how it's evolved over the last couple of years and probably going forward, we have numerous things which influence investment decisions, what we see at investors. Geopolitics, for one. The most obvious, staying here in New York, Trump Tower behind us, all that rumbling going around that. But on the other hand, going over the pond, Europe got a lot of geopolitics issues going on as well. If you look at Asia, their geopolitics issues. So that's definitely an aspect coming more into play. I think they will challenge the US, and they will probably be more challenged by their ICs at home, which do not work and operate boots on the ground in the market all the time. And hence they might be forced, in inverted comma forced, or asked to look at other opportunities and compare and contrast a little bit more. And that's what we're trying to achieve in the panel. I definitely will probe if there's a transitioning happening, how much they want to still invest. Has their views on markets changed? If yes, how much has it changed? And we definitely could see that on parts. If I come to a conclusion, I remain very positive about the US market. And we heard it on one of the economist panels this morning, or discussion this morning. There might be a chance for a recession, but it might not be severe. But again, real estate is a long-term play. And if you're sticking in for the long term, you need to sit certain things through, weather the storm. And we heard as well, some people called on certain sectors to bottom. So there might be opportunities to do it. And this is now the time to step in and to harvest. So I think overall I'm positive, but I'm equally positive on some other opportunities outside the US. But still, the market not to be neglected.